What if a company keeps pouring billions into Bitcoin, but instead of going up, its stock keeps sliding down? Sounds strange, right? But that's exactly the situation Strategy is facing right now, and it's raising some serious questions. This content is for educational purposes only and should not be considered financial advice. Right now, Strategy's stock is struggling to stay above the $135 level after a noticeable drop during the day. The price slipped over 3%, hovering around $134. This kind of movement clearly shows one thing. There's more selling pressure in the market than buying strength at the moment. No matter how you look at it, the overall sentiment still leans on the weaker side. But here's where things get interesting. While the stock is under pressure, the company itself is making some massive moves behind the scenes. Strategy has already raised over $22 billion and is aiming to go beyond $42 billion. And all of this is being used for one major purpose: buying more Bitcoin. In its latest move, the company added more than 22,000 Bitcoin to its portfolio, worth close to $1.6 billion. That's not a small bet. That's a strong, aggressive conviction play. But despite this bold strategy, the stock isn't reacting the way many would expect. And that's where the real story begins. One major factor here is dilution. The company is continuously issuing new shares to raise funds, which can reduce the value for existing investors. On top of that, there has also been insider selling. When top executives start selling shares, it can create doubt in the market, even if the long-term vision remains intact. In the short term, the stock is also showing signs of instability. It started the day lower than its previous closing price, which already hinted at weakness. Throughout the session, the price tried to stabilize, but the overall direction stayed negative. Buyers showed up briefly, but they couldn't hold control for long. Now, when it comes to momentum, the signals are not very clear. Some signs suggest that the stock may be trying to recover from a short-term oversold condition. But at the same time, the strength behind that recovery just isn't strong enough. It feels more like a temporary pause rather than a real reversal. So what happens next? For the next few days, the stock is likely to stay within a narrow range, roughly between $132 and $139. Right now, the upside potential looks limited, while the downside risk still feels more dominant. If the price drops below that lower zone, we could see further weakness. On the flip side, any strong upward move would need real buying pressure, not just short-term reactions. Experts are also leaning toward a cautious outlook. The general view is simple. Until the stock shows a strong recovery and proves it can move higher with confidence, it's better to stay careful. Any small bounce at this stage might not be reliable. And this connects back to the bigger picture. Strategy's approach is bold, no doubt about that. The company is aggressively doubling down on Bitcoin and positioning itself for the long term. But in the short term, this strategy comes with pressure. Continuous fundraising combined with insider activity is creating uncertainty in the market. So right now, we're looking at a very interesting situation. A company that is extremely confident in its long-term vision, but a market that isn't fully convinced yet. And until that gap closes, the stock may continue to face pressure. So, if you found this video valuable and want to stay ahead in crypto, market trends, and smart investing strategies, make sure to subscribe to MSTR Hub. Don't forget to like this video, share it with others, and drop your thoughts in the comments. Is this a real opportunity or just another risk? And most importantly, hit the bell icon so you never miss an update. Thanks for watching, and remember, smart moves build strong portfolios. MSTR Hub, where market insight meets strategy.